It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday. Market days, obviously that excludes tomorrow. So everyone have a wonderful 4th of July. Looks like it's going to be a kind of a washout over here, which is a pity. Had to have plans changed already. We'll see what happens between now and this evening. But back at the ranch, the market doesn't know anything about July the 4th. All it's doing is celebrating the 3rd. And that means that the Dow has gone to a new all-time high, not a recovery high, but an all-time high. The E-minis, in fact, predicted that this morning by the pattern that we've been looking at for 1.5 days, and that is that rectangle formation that I identified as a peak D at 1971.75. You can see it in this chart right here. If you're looking at Tiger TV, you're looking at the right chart over here. This shows that the 1971.75 to 1964.50 area was in fact a containment area all the way from the first. And what we're looking at is I had identified there could be one more spike to the upside and then come back into the range towards the 1970 or the 1960, high 1960s. We'll see. The day's young. We're about to close early today, so we'll see what happens. In the meantime, this is now a leg D in the daily chart. I wonder if I can make this a little bigger so that you can see what I'm looking at. There is a potential for an 8-beat equals CD. Move to the upside. I call this a Chapman wave extension. It's a particular technique that I use. And that would say that by the 8th of July, so let me see, 8th of July, today's the 3rd, so I should be able to quickly identify that. Give me 1 second. I think that's Tuesday. Let me just check that out. The 8th of July is, in fact, Tuesday. By the 8th, you could, in fact, be seeing somewhere into the 1979, maybe the into the 1970s. That's about another 3-4 points from here, if that, but somewhere in that area, because this is also a trend line resistance. Let me show you the dashed line right there. So there's the apex coming in right at 3:15 on the 8th of July, if that works out. So if in fact what we're looking at is the MACD, which has just crossed positive and the stochastics at 88%, that says that this rally could have a little bit more room to go going into the, going into Monday at about 2 o'clock. Unless there's a pullback, and then Tuesday we have a little pop. Now, there's a reason why I was thinking that there was still room on the upside. If I can just show you this on the I'll go through one at a time. In fact, let's do this. It's a quiet day today. Not too much happening. If you're in positions and they're working either long or short, congratulations, because that's exactly the market that we're in right now. So this is a leg D that we were looking at in the Chapman wave methodology. There's a particular technique that says if you can go from the left side to the right side in a cup formation, and you can do it in a certain amount of time, a measured move, that is, measured number of bars from the left to the right, and you can break the previous lip high. In this case, it would be peak F, the sixth highest peak. See, it did not do that before. From the 9th of June, there was this decline down to the 12th, was it? Yeah, down to the 12th of June at 16,703. We're looking at the Dow at 16,703. And then there was a move to the upside. And with a measured move that I had here from the most identifiable, in this case, the second candle, most identifiable candle for this particular technique in the Chapman wave, it should have taken you by the 19th of June to that particular high. In fact, what it did is it was a day later and went just a fraction higher and closed below that level, and that was a peak F again, and that pulled back in 3 moves to the downside And what we then saw was a move as the stochastic and MACD improved to today's spike sharply above. It actually did that once, but that was peak C on the 1st of July. Pulls back a little bit, and now it snaps out of it. So that's a particular pattern that I call the Chapman wave cup and ladle. And that says you should go to at least a D. After that, you've got to be a little careful, because when the pullback occurs, it should take you to or just under the previous high, in this case, Dow 16,921. So that's the stance right now. That was the first thing of importance. That's the 120-minute chart. But in the daily chart, we've got a notation that says this, in fact, could be, and this is kind of what I'm leaning towards, an alternate count of an F/C. My bias probably by the end of the day will be that this is really a C, that we're going to get one more pullback and then go to a D. And then you've got to be a little bit careful. So it's still very positive for the Dow. You can see in this chart that I show my subscribers every day, there's the Dow 120-minute chart, leg D. There's a leg E to the downside in the VIX index, getting to the 10. It made a low of 1040. 1043 was the last low. This is getting to the area where you can start to expect we're going to be seeing a little tension between the oversold, for the first time I'm calling it the oversold VIX index, and the overbought market indexes. The trend is not telling us very much, and you've got that notation that I just discussed, leg C in the Dow, and I believe I'm going to have to call this E/C in the, I think so, in the S&P. And here's the Dow. The diamonds also spiked to the Dow peak D, leg D at this particular point. Now there's a whole bunch of things I wanted to look at. I had questions yesterday. I thought I was getting to them all, but even with the 2 hours I had, I never got to the one. I'll do it right now because it's really quite important. The question was, in the Chapman wave methodology is a particular pattern that I call the stalk leg formation. That means there's a strong series of legs to the upside. Then the pattern starts to make an oval formation, and that oval formation goes sideways, and it really doesn't look like a rectangle. It looks like an oval with slightly higher highs and lower highs, and then slightly lower lows, and then higher lows, until there's a snap to the upside, and that makes the neck. And the question was, is J.P. Morgan doing that particular pattern? My answer was, it conceivably could be doing it, although the technicals are negative. That's the big difference here. The technicals are not holding steadily. And because the technicals are negative, two things are about to happen. One is that if there's a spike and it goes above 58.22, that was the oval high at peak D, there's a chance that you get this pattern that I call the rogue wave, and it'll go just one move up about 58.22 shorts. We'll have to cover, and the very bar that does that starts to decline. And within that bar or the very next bar, that's within 1 day, there should be a move almost back to where we are right now. And then it just goes merrily on its way as if nothing happened. It's what I call a rogue wave. It just happens out of the blue, and it's really not changing a trend, in this case, a downtrend. So that's what I'm looking at. So there is a chance that it could happen. No chance at all if it takes out 56.60. Well, it's at 57.28, J.P. Morgan right now. Yes, I mean, usually I would go for the low bar, and that would be 56.33. Yeah, between 56.33 and 56.60. Any close below that says it's all over. J.P. Morgan's coming down to test the 55.61 200-period moving average. That's my stance right now. So I hope that answers the question. Okay, now let's just go numbers. The Dow's up 65 at 17,041. The S&P, I'll get you the S&P chart right here. SPX.X. We'll treat this as Technical Friday with Chapman wave. You can answer questions about the Chapman wave. So I've got a D. Well, I've got a number of ways. I am going to call this leg D in the S&P. I feel very comfortable, even though there was an instant restart. It could be an E, could have recycled. I don't know. I'm just calling it leg D. It just seems to match everything I'm looking at. And that's the daily, the weekly is in leg E, and the monthly is in leg D. So that's that. So the parameters are 1966 is the key. 1966 to 1960, all of next week. That's the major support that you're going to watch for. And on the upside, as I said, there could be an extension. That extension could give you a one-to-one. And in this case, it would take you to almost almost 2000, maybe 1989 to 1992-ish. Let's go one step at a time. That's what I'm kind of looking at right now. And you've got a leg E up in the 120-minute chart. So that's that. Now let's go to the Qs. Or 1, 2, 3. I go to the Qs because most people trade the Qs and not the comp index. I've got leg C up, fabulous move. Gosh, that's a beautiful move. To think we were long all the way from just about the bottom in the TQQQ, in the 3-time long, and then I got out. At peak D. And then it just ran a whole new cycle. Beautiful. I like to see that. I don't like to miss the trade. This is leg E in the 120-minute chart of the Qs, leg E in the weekly chart, leg E/B, calling it E for now, and leg F/B in the monthly. So far, no signals in any of the time frames to say it's about to turn down. It could happen suddenly by early next week, but it hasn't happened yet. IWM right here is, oops, I need to double check. IWM. Yeah, we got Jim in Boston. Hi, Jim. How are you?
Hello. Very good.
But just as I got to the IWM, isn't that a coincidence? I didn't even see that.
Super.
Jim, what is your question?
So, my question is about the IWM.
Yes.
I'm wondering about the symmetry with respect to the top here, or with respect to the pattern since the previous top. I guess we double top. Or at least challenge the old top, and it seems to run short of a time dimension that I'm maintaining, and I wonder what your idea is with respect to any left side, right side time match, as you put it.
Yes, so it's first of all, it's a great question and a really good observation. Most people don't look at it this way, and because you're looking at it this way, I'm going to deal with it in a manner that says, let's look at it from the first objective candle that we can use, even if it's not the low that we can see now, identifying it in historically looking backwards. I would have chosen this candle, the candle of the 7th of May, for both the look, the MACD, the stochastic, everything about it, and I would choose that candle as the left side. And I'm going to type in here LS so that folks can see it. Hope you can see it as well. Mm-hmm. Now I'm going to go new parallel, so that's an easy thing that I can do on TradeStation. And I'm about to put that in, and that says you've extended by too much. So I said to myself, okay, if I was doing this, if you don't identify the most obvious left candle, which would have been the very first one of the 15th of April, where would the next one be? And that candle is this little tiny doji here. I'm going to take it on the doji of the high of the 2nd of May. So we've got a break coming up. I'll do a little work beforehand to show you the methodology involved, because it not only involves the horizontal, it involves the diagonal. So I'll be right back with Jim. Great question. And I will be back with him. And the Dow's up 60 points and he's up 6.8. Interesting. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Dow's up 60, S&P's up 6.50, and we got a great question from Jim in Boston. And Jim asked about the left side, right side price time match in the IWM, which is the iShares Russell 2000 ETF. And in this particular instance, what I did is, if I was, I'd done this before, but I kind of lost that and I had to redo it. My first instinct is to go back and to halve the chart so that it's as if I wasn't seeing it. And where would I start to choose? And I would choose that there was a pullback from the 120.58 high of the 4th of March. It comes down trough A, B, C, D on the way down. We call them troughs. It makes an arch formation and it retests goes to trough E and an F with a real nice turnaround on the, can I see that? Yeah, on the 9th of May. So when I look back, what I would have done is the rule of my particular technique says, take the left side low of importance, and that's the one at 108.66, trough D at the 15th, and start drawing a line to the most recent candle, and that's the candle of the 12th of May, and just make it a diagonal candle, and let it just shoot out to the right. You don't know where it's going to go, whether it's correct or not. That's kind of an easy way of doing it. Why? Because the H pattern can become very strong. If the technicals start to improve and it ever takes out the left side arch high, that's the high in that H pattern, lowercase h, of the 22nd of April at 115.02. Now, if you follow it, you'll see that became very strong resistance at 117.48 on the 9th of June. And then that left side, right side takes you to, and right here I'm showing it in a little bit, it's got a little bit of green in it, and it goes right to yesterday. And what did it do? 2 days ago, it went right to the 120.58 level, and it went to the 1st of July. So it met all the requirements. I should have done that in the beginning, because that is a technique that I invariably use. And you can see that by joining that low bar of consequence on the left and joining the upper wicks of the 12th of May, and then what did I say, June the 9th, it goes to exactly yesterday or today, right there. It's a diagonal longer-term trend line, so if you miss by a fraction, as time evolves, so the distance that it misses by gets greater. But in this case, it missed it only by being earlier day or being exact. So my answer to you is that's one of the techniques I would use. I'm not sure. Where did you take your left side to the right side? Where was your midpoint, what I call the plumb line?
Sure. Yeah, I was using a completely different method, but it would correspond to the double doji at the exact bottom, so it would give a very symmetric appearance.
Yeah, then it's still ongoing, correct?
Well, you know, the funny thing is we again, this is completely separate from your analysis, but there may be a separate echo here, and we may see, you know, another high or another approach of that high coming on that doji date. That's what I'm kind of anticipating. I'm not trading it. I'm just very interested in how it works, you know, and sort of.
Well, one of the things about this particular technique is that when it is at the exact low or the exact high, and everything is working in sequence, and it keeps bumping up against the diagonal, what I call the Chapman wave inside wedge diagonal line, it is remarkable how everyone says you go up quicker than you come down, you come down quicker than you go up, and that is the emotional response that I think is correct. But the reality is that if you look at enough charts, you will find there are as many strong candles to the upside, what I call the rocket ship to the upside, or there are these crashes to the downside, and that the crashes very often come after the move has gone quite extended to the downside, so that the last little bit could be kind of in crash mode, but in the end, from the one side to the other, it is remarkable how many times there's a beautiful symmetry.
Symmetry, yeah.
Now my symmetry is a little different because there's a technique that I like to teach when I do my Master Trader series, so we can look at enough charts. And there are particular candles that I like to look for, and those are the candles that, if it doesn't look like it's going to be the exact top or the exact bottom to give you a perfect arch, 28 bars on the left to 28 bars on the right, or whatever it is, then what I do is I look for something that looks equally important where, do you mind holding on? We can talk a little bit more about it.
Not at all. Yeah,
okay, great. We've got Jim taking a little time today. It's a fairly quiet day, except for a quiet day. The Dow's now up 70. S&P's up 0.761. One of the reasons why we went to the mixed portfolio here, longs and shorts. I'll be right back with Jim and Basil Chapman, Tiger Technicians out.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks, we're back. So we're looking at the IWM, that's the Russell 2000 ETF, trading at 119.85, up 75 cents. Underneath the last major high, which is all-time high of 120.97. Let me just get that in. 120.97. And as a result, what we're looking at is it's lagging a little bit. It's up 0.63% today, but it lagged yesterday. And the general market, you've got the Dow up 0.44%, and you've got the S&P up 0.41. This being the 3rd of July, let me just quickly give you some information. The S&P is now up 8.08 to 1982.72. You've got the comp index up 20 at 44.78. Gold is down 12. And let me just quickly show you this. We've got Jim online, but Jim, I hope you don't mind. I just want to do these numbers quickly. So we've got the GLD having made peak E at 128.20. 128.24 yesterday, pulling back to the 200-period moving average. I think there's a little digestive phase right here for gold. Let's see what the dollar's doing. DXY. This is a continuous contract. Yeah, I keep hitting that, huh? DXY. Yeah, a very strong move to the upside. 80.41 is the 200-period moving average that it broke under for days and days. In 3 days, it's trying to get there. Maybe by the fourth day, it'll do that on Monday. But 80.41 is the level to break and to close at about 80.55. And that'll say, hey, the dollar is starting to strengthen, and that's going to be really important because the MACD and stochastic have turned up. So I just want you to do the TLT, which is so important in case I run out of time. The TLT is trying to make some kind of a base here, but it broke below the 110.83 level, and in the weekly chart, there's very much an A to B equals C to D to the downside, and it says if 110 key support is broken, 109.24 is the 9-period moving average, and in the weekly chart, you've got a leg C in the yield, and that's, whoa, when you get to a leg C, very seldom does it ever fail at leg C. It usually goes to at least a D. So I'm looking at the next couple of weeks saying rates could, in fact, go a little higher as bonds come back down. And now I'm going back to the IWM because this is a very important question. And there's a purely technical mathematical way that I do it. Then there is a particular way that is very, very specific. And then there's an artistic way where I've got to use a little, I'm a very visual person, so I need to use the visuals to do it. But what I found is if I can go from a left side identifiable low bar that seemed to be one of great importance, and once you've made the low, there's a confirmation that any particular candle you've chosen as a very good support level for the diagonal that's going up back towards the previous high, that's the one you want to use, and that's exactly the case here when it went from the high of the 12th of May, continued right into the candle perfectly. The candle of the 9th of June said to me that that is a good one, and look what's happened. It hit it exactly 3 days ago. So to me, it's accomplished everything it needs to accomplish. Now what we can have is when the tide changes, it doesn't just change on one tide. It changes by a whole flurries of tides, where some make new highs up on the beach and some don't get there at all. Then you might get that one rogue wave, but the tide has already changed. And I'm suspecting, based on the stochastic and the MACD, that in the IWM there is the sign of a change of trend in the daily, but I have not yet got any confirmation of a sell signal or even a sell mode. And what would give it to me is if the IWM breaks and closes, it's at 119.86. If it closes under 118.02, and it does that for 2 out of 3 sessions over the next 3 to 7 sessions, I'll say, right, finally the IWM is giving a signal that it wants to consolidate, maybe go down to the 116 to the 114 area. But the weekly chart is the one that's the most. The weekly chart made a lower low than the start of the new buy mode that would have been in place with an instant restart with a low of 107.14 the week of the 8th of November. Because what did it do? It went to 107.44. Now that little momentary blip underneath is part of a technique that I use that's called the Chapman wave flat base restart. It's complicated for people to listen to. It's very wonderful to watch visually when I point these things out. So I'm just going to leave it for now, other than to say there is a chance that I'm going to call this latest leg that made a lower low and then went to and now started another move to the upside. I'm calling it E/A for now. And my preference, actually, now that it's gone to the new recovery high from 3 days ago, is to call it E/A. I don't really see a big chance of it being a brand new A, saying that for the next, it'll be a minimum of 3 months. The Russell iShares are going to go higher. I can't say that yet. So Let me just quickly ask you, in your left side, right side price time match, whereabout are you?
So my method is a little bit different, and it's based on calendar days.
Yep.
So it's not visual at all, but I'm looking out 2 weeks for a possible high, which doesn't mean the same trend. So the the chart itself could look a little different.
In other words,
I was wondering your opinion, because I know that when your left side right side matches on, it seems to be dead right on. So
okay, let's do this now. What date is your midpoint?
Very good. So my midpoint, I actually don't have it in front of me, but is very close to the doji on 5:15.
15. Okay, great.
Yeah.
So it doesn't matter whether it's within a 2 or 3 bars, regardless of whether you do it mathematically or whether you do it
with holiday days, right? So we've got a holiday period in here. So so you've got it throws it off. The holiday in particular throws the visualness of it off a little bit. I don't know if you ever noticed that with respect to your left side, right side.
But if you're doing it on calendar days, are you doing it market days or just purely calendar?
No, just purely calendar days. Yeah.
Oh, big difference. Okay, right. I'm pleased you said that. Okay. The question in the den, Egerton says, is that called T-theory? Well, actually, it's not T-theory because Landry, who I never got to meet, I missed meeting him just by almost a weekend or two. He suddenly died a few years ago. He lived in Nantucket, and there was a chance that I've heard about him for years and years. I did not get a chance to meet him. It's a great shame, but I believe that he uses other techniques that give you the T-theory, and he would use both the volume as well as some of the moving averages. So let me do this now. I'm going to do this excluding calendar days, but do you realize that if I do it to the left side and I do it to the right side, both of them have weekends. So both of them would give me the same measured move. Right?
Yeah, it would look very symmetrical, except around the, if you have large holiday periods in the between. But
right, so
the accuracy it's a matter of accuracy and.
Okay, you must stick with yours because that's your plan.
No. I think with either method, I think there's a lot of probability that, it's when it's on dead right. When it's off, it's off. I mean,
it's off.
I don't think it's a confirmation thing more than a reason to take a trade, I believe.
Okay, I love that. That's very good. Now, my measured move goes to July the 24th.
Yeah, somewhere around that time. Yeah, so we're looking. So and it corresponds with a lot of other indications which are based on time. So one of the things that Landry looked at was, and I believe it was adopted by someone it was something called a money flow T with respect to. Do you understand? Are you familiar with that? So
I am.
It's a symmetry about money flows indicators, and there are other stocks and ETFs that I follow that are giving another indication that things want to extend out that far. That's all.
Now I love what you're saying because it's in a sense what it's doing is saying the strength that I'm looking at in not the IWM, but let's go to the broader New York Stock Exchange.
Yeah, exactly. Yeah.
The strength that I'm looking at in the MACD and the slow stochastic, and the fact that it's in leg D in the weekly chart, it's in leg D in the daily chart, it's leg E in the monthly chart, says to me that I could not get a sell signal. I probably could not get a sell signal of significance for a while to come. That's a good few weeks.
Right. Yeah, I think that's what things are telling me anyway. I don't.
The daily chart.
No,
I love the fact that you're trying to put together a number of things, and it sounds like you've got a very cogent way of explaining it and of assessing. So what I'm going to say is the way I'm looking at it right now, the breakout today, it's funny that it has to be today. But why? Because the Dow chart has made these double cup formations, and these double cup formations, let me just find it right here, say that there should be a move higher, but we are getting close to yet another shorter-term top, which could come in maybe Tuesday or Wednesday of next week.
Sure,
and the fact that we continue to make higher highs and higher lows in a very symmetrical and orderly fashion says that I must not extrapolate from that data that too many bad things are going to happen as of now, especially since bonds have pulled back. Even though I don't think bonds are going to tank much more, I think they're pulling back. And I just discussed a weekly chart that says yields should go a little higher over the coming couple of weeks. Now, what's really important about this is that if I look at this major, there are no technical indicators. Well, there used to be no indicators. Now there's a 9-period moving average on it. But other than that, there are just channel lines. And the channel line of this Dow chart that I'm showing now with a black background, and I had a question right here back in January, are we here waiting for D? Well, we went to D, we pulled back, and we went to an E, and we're in leg E. And that says, hey, mister, be careful, because there could still be an F to come. We could even have recycled, if this is a brand new bull market phase starting right now, we could have recycled. This could be in the monthly chart brand new A, and that would take us to next year. I think that is theory, because in theory, you can say anything you want.
Exactly.
But I'm just saying that for me, on a more practical level, there is a match that it cannot be denied. There's also a match in my work that says if you start to go towards the outside up-channel resistance line, and you constantly fail to make that line, you have to look for another trend line that has less of an angle. And that's the one that's going to give you a resistance. And that one says that somewhere around 17,220 to 17,350, that's probably the next level of resistance that's going to be really important for the Dow. So we could see a pullback and then a build in the rotation that says, hey, you know what? You've got some of the Dow stocks acting quite poorly, and you might even have some of the oil service stocks start to decline here, but you might find that there are other stocks that are going to take their place. So the rotation means it's not a parabolic move in the sense that you've got a massive bunch of stocks that are just going to soar and scream to the upside. Rather, it's a systematic rotation with fund managers pushing money into the stocks that are working and pulling it out of the stocks that aren't working. So that's kind of how I'm looking at it now, to say this is a moment that is very important. Right now, as we're speaking, this breakout, this extra little boost that takes it down to plus 80, S&P plus 8.36 says this is another big white candle in this particular chart with the white background, and you cannot deny that just looking at the last, since the low of May the 21st, all the white candles and just 3 ugly black candles, just real strong moves down, are just totally outweighed by the white candles. And in the case that I show on the chart here, the green candles for the NYA, look how many green candles there are to the red candles. So I have to say the weight of evidence just right at this time says buying is coming in. The New York Stock Exchange at 11,095 next week should hit a lot of resistance going into the 11,120s, that area. So I'm in the camp that said, and as you said, you might find that you do meet that particular target, but it's a bumpy ride going there. And that's kind of, and now
so another thing, it doesn't necessarily have to make a high in this instance, a new high. It could just approach the old one.
Right,
so,
but normally with my match time price matches, they go to the highs or the lows.
Right. Okay. Good. Yeah.
So
very good.
Now,
so super. Thank you for your help. If you have a chance, Apple is of interest to me.
All right. Apple was a question in the den as well. So the question in the den was: is Apple in leg E in the peak C in the weekly? And I say no. It's at peak D with the 95.05 is the high. So do you have a position, or is this just a question?
No, I have a position, a small position in Apple, just of interest. I'm expecting the old highs to be challenged.
Okay, great. We're going to be back. This is the Basil and Jim show from Boston, Massachusetts. Cloud cover coming, and I hope it's not too much rain. And we'll be right back with the final segment on a short date. I'll close it at 1. Right, I was up 81.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks, and before we run out of time, we once again wish everyone just a wonderful 4th of July. It's a wonderful holiday and just a nice long weekend. We'll see you back here Monday. Don't forget my opening calls, my daily service. I had a quick question from a subscriber, just an email question, and said, what is BRLI, Bioreference Labs, in? Remember, this is the one that I said could go into a rectangle formation and make a new A, B, C, D, and this is in the 300-minute chart. It's in leg D. I start raising my stop on some part of my position here because it's accomplishing exactly what we wanted. Now, the question that Jim wanted was just generally about Apple, what's happening with it. And Apple has made, oops, I got stuck there, a little humid, A to B to C to D. And don't forget, straight off, this is Thursday. I think we're going to be replaying programs today, so stay tuned. You can hear some rebroadcasts because we're going to be wrapping up early today. So Apple has made a peak D in the 120-minute chart. It's consolidating. It's walking the 9-period moving average of 93.43. If Apple takes out 93 to 92.50 support next week, it says be a little bit careful, because in the daily chart, here's that left side, right side price time match. I chose the high of 95.05 as a peak F, but there is an instant restart, so it's really an F/B. It pulls back kind of in an A to B equals C to D, one-to-one extension, goes down to the low of 89.65 on the 25th of June. If there's going to be a left side, right side price time match, then it really must hold 92.56. It must just touch it and then spring back, and then it's got until the 11th of July to get back to 95.05 if this is going to be a cup formation with a little jagged inside spike and pullback, and then a modest move to the upside. So that's the way I would look at it. If it takes out 95.05, that starts leg E in the weekly, and it extends leg D in the monthly. And if this is going to be the same sort of thing occurring in the monthly, then you would be looking at probably sometime this summer that 100.72 is taken out for a cup formation in the week. I just don't have time right now to do the analysis. It looks to me like it should happen by September. There should be, it could be earlier, but by September there should be a push to retouch the previous high of 100.72. Of course, that's post-split. Now, how does it fail? It goes into a rectangle formation if at any point it breaks under 90, because at 89.41 is the 9-period moving average. And then what would happen, and this is something that I cannot rule out, that only if Apple does slide about 4 points or so in July, then you're going to be looking at more like a rectangle formation, because the MACD is still strong and the stochastic is still good. So I have to anticipate that you're really looking at very good support on the down moves, but right now there's an upward bias. I don't know how that correlates to what you're looking at, but is Jim there? Oops, I think we just lost Jim. Oh, we lost Jim. Okay, Jim, I did the analysis. I'm not sure. Let's speak sometime next week maybe and see what's happening. Okay, back at the ranch, we've got the last couple of minutes here, maybe not even minutes. Let me just run through what I'm looking at here. The Dow right now, I'll use the Dow. The Dow is in a very, very strong leg C. I'm going to call it a C. I don't think this is an F. It's a C in the daily. That should go to at least a D. It's an E in the weekly, and it's making the head formation in that pattern I call the Chapman wave stalk leg. That's the weekly, and the monthly is in leg E. Very, very strong. Stochastic is not that good, and the MACD just today has crossed positive, and that says, hey, nice move. Let's see what happens after this. But my suspicion is that sometime next week we will get some kind of little topping action, and then we'll get maybe a pullback into the body that we were looking at here. To where we were 3 days ago, back into the 60,800s. Wow, what a strong market. We'll deal with that next week. In the meantime, have a wonderful weekend, everybody. Thanks for being here. Check out my opening call on TFNN. And thank you to my engineer, Al, for getting me organized here.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.